If you bought $1,000 of Bitcoin in January, you'd have over $20,000 in December. But if you cashed out, you could owe the government upwards of $7,000. According to Uncle Sam, Bitcoin is not currency, it's property. That means whenever you buy something with Bitcoin, it's not one transaction, it's two. What you're actually doing is selling a property for a cash value, and then using money from that sale to buy a product. So every purchase you make with Bitcoin has to be reported in your taxes. And with Bitcoin's value constantly changing, keeping track of all that data could be a nightmare come tax time. But let's say you're just holding onto Bitcoin as an investment. You've watched the value grow and now want to cash out. If you've held those Bitcoins for less than a year, that cash will be taxed as income. If you've held for over a year, be ready to give the IRS as much as 20% of what you've gained. Tack on transaction and accounting fees, and you could be out up to 60%, as was the experience of one early Bitcoin adopter. But here's the problem, almost no one does it. From 2013 to 2015, less than 900 people each year reported Bitcoin transactions to the IRS. That's out of millions just counting the number of users on crypto exchange Coinbase alone. That prompted the IRS to label cryptocurrency as property back in 2014, and to recently serve a summons to Coinbase. They called for the records of over 14,000 users who have bought, sold, sent, or received at least $20,000 worth of Bitcoin in a given year. A federal court ultimately ruled in favor of the IRS, but the tax fate of those transactions is still unknown. Moving forward, though, there may be some relief. A bipartisan bill, the Cryptocurrency Tax Fairness Act, was presented to Congress in September. It's seeking to create a tax exemption for crypto transactions under $600. So there is some hope for amnesty, but with the price of Bitcoin skyrocketing, Uncle Sam still looks poised to get a decent cut of the action.